Okay, so I'll start. Yeah.
Good evening. Good evening, the guest for the day, Rajendra Palande sir, and my colleague in the Regional Council and Treasurer of SIRC, Revati Madam, and also the viewers, the members, the students, and the other invitees at large. Today is another important day in the process of knowing about the ways of investment, the nitty-gritties of the process of investment and their income risks involved, all these things. And today we have a regulatory authority from SEBI who has vast experience in this field, and what are the regulations that are implemented and that are governed by SEBI, along with the risks involved and the cautions that one has to take during the process of investments and choosing the options of investment. All these things will be dealt with. And this program has been done by the SIRC, at least one program in a month. Since March, we have been doing this. And as you all know, this Investor Awareness Program is the brainchild of Ministry of Corporate Affairs, Union Government. So to support the investor awareness program headed by the central government, we as part of the nation building, being supportive role to the Union Ministry, we do these programs, and this program is for August month, and we have Palande sir from SEBI for this program today. Before he enters into the topic, I request Revati Raghunathan to introduce the speaker to the August audience. Over to you, ma'am.
Thank you very much, Panaraj sir. Good evening, everyone. Good evening, Ravindra Palande sir. It's a great honor that you have accepted our invitation. Friends, we all are very familiar with the stock market, and we are very familiar with this statement: equity investments are subject to market risk. And in spite of the fact that this is one statement which is beamed across all investment advertisements and in all the newspaper ads, we have all always been prone to going into the investment market, in spite of the fact that there are many crashes and booms. In fact, since the founding of the Bombay Stock Exchange in 1875, there have been many booms and crashes. But surprisingly, the first crash was in 1865, before the formal trading in the share market began. And this pandemic-induced crashes of 2020 and 2021 will be in the forefront of our memories now. In spite of the fact we know that what is a crash, it is because there is a sudden decline in the stock prices, resulting in a loss of wealth, even though it is only paper wealth. And there is a boom when there is a substantial increase. Do we all really actually want to trade? Because you know what happens, in my own personal experience, I always find myself chasing the stocks when the market is rising, and then deciding to sell it when the markets are crashing. And I was just talking with our chief guest, and he said that what, as a regulator, what they do is they help people in understanding the timing, what are the pitfalls in taking the decisions to invest in the market. What do we as rational, educated retail investors who also get caught up in the vortex of trading? So sir has come here to tell us about the pitfalls and the problems in investing in the in the stock market. He is a master's in commerce and a certified investment banker from the Institute of Chartered Financial Analysts of India, and has over 25 years of experience in the field of capital markets. And since the last 24 years, he's working with BSE, handling functions of various key operational departments such as clearing and settlement, listing operations, investor services cell, membership and inspection, etc. And presently, he's working as a deputy general manager with BSE IPF from April 2020, where the core activity is imparting education to general investors and creating awareness about the investment in the securities market. So I think we should thank Sir for actually, accepting our invitation and coming forward to give us this education, even though we are professionals, to guide us through the pitfalls and the problems in the stock market. Thank you very much. Sir. Over to you.
Thank you, Ravindra madam, for nice introduction. And it's my great pleasure to be here with you today evening. See, as an investor protection fund, BSE has taken a lot of initiatives, and under these initiatives, we are conducting various webinars for investor education and awareness purpose. As a first level regulator, see, I am from Bombay Stock Exchange. So as a first level regulator, our responsibility is to educate the investors and make them aware about various measures which SEBI is taking to protect the investors. So if you see my today's presentation, the topics will be more towards how educating the normal investor, common investors of the country, and making them aware about the precautions which they should be taking to protect their money. So the whole topics which are covered under my presentation are categorized into broadly categorized into four categories, four parts. One is, I will first explain what is the importance of saving and investment, wealth creation, and then where is that avenue available for creation wealth, that is stock market, and then what are the various measures which SEBI has taken to protect the money of the investors, which is routed through stock exchange channel, and then what are the recourse available to the investors when there is a dispute arising out of these trades with the stockbrokers and depository participants. So basically, this is the broad guidelines under which my presentation will flow. So without taking much of the time, I will just share my I start my presentation. Give me a moment to share my presentation. Okay. So can you see my screen, madam? Yeah. Okay. So the topic today is overview of stock market investment. Slides are not moving. Okay. Now, before we start, let us understand the importance of saving. Now we all know that we need money for to fulfill all our life goals. So from where this money comes? This money comes from our regular business professions or job which we are doing. So whatever money which we are earning on a monthly basis, we are meeting the expenses, day-to-day expenses of our life, and then whatever remains is the saving. But is this the correct formula? Is this the correct method which we follow? So the answer is no. This is not the correct way of managing our money. So what is the correct way? So the correct way has been explained by our Warren Buffett. He has changed this formula slightly. What he has done, he has given more importance to saving than expenses. So he is saying that first you should focus on saving, and whatever money which remains after saving should be your expenses. So this is how he has given importance to the saving of money. So this is the correct formula which Warren Buffett has given us for realizing us the importance, showing us the importance of saving. Now, generally, we Indians are, when it comes to saving our investment, saving our money, we generally go for the traditional ways of bank FDs and post office saving schemes. These are the normal choices of our we Indian people. So we have to ask ourselves whether this is sufficient, that we are investing in, we are putting our money in bank FDs and post offices. Is it a correct way of doing our investments? So answer is no. The bank FDs and post office schemes, the returns which we are getting in the recent years have decreased phenomenally. Hardly there is any, we are getting hardly 5% of returns from these schemes. So these returns which we are getting are not even enough to beat the inflation. And the actual net income is, we are actually making a loss in net income if we consider the inflation part of it. So what is to be done? Saving needs to be invested for creation of wealth. Now, if we want to achieve our life goals, we have to create wealth, and that wealth cannot be created through bank FDs and post office saving schemes. So is there a place, you will ask me, is there a place where we can create this wealth? Yes, of course, there is a place where you can create the wealth, and that place is stock market. Now, stock market is the place where you can actually create the wealth. But one thing is there is a disclaimer, that is, it is a high risk, high return zone. As you are aware, there is a direct correlation between risk return rewards. So when I say that the wealth creation is happening in the stock market, let us understand by one example. I will give you one example how the wealth has been created over last 40 years through stock market investments. Now, under stock, when you invest through stock market, the returns which you get from your investments actually compounds. So as rightly said by Warren Buffett, compounding is the eighth wonder of this world. And I will show you how that eighth wonder works when you invest through stock market. So Sensex computation, for this purpose, I will give you an example of a Sensex. The index, the most popular index, which is followed by everyone today. This Sensex computation started in the year 1978-79. And that time, the base was taken as 100. Now, if you would have invested 100 rupees in the companies which constituted the Sensex that time, and if you continue to adjust your portfolio as per the changes which have happened in the Sensex scripts over the period of time, the today's value of those 100 rupees would have been 55,000 rupees. So this is the phenomenal growth which has taken place through stock market investment. This is the effect of compounding, because you get money on the investments, your investment keep on increasing exponentially over the period of time. In this 55,000, I am adding 20,000 more towards the dividend which these companies would have paid to you. So this is the value appreciation, 55,000, and 20,000 we can add, another 20,000 we can add towards the dividend which these companies would have paid to you. So in all, the 100 rupees which was invested in 78-79 would have become 75,000 rupees. Just imagine the growth of the volume of wealth which is created through stock market investments. Now, the tragedy of this wealth creation is that only 4% of our population has actually gained from this wealth creation. Why? Because the 4% of our total population only invest in stock market, vis-a-vis 50% in USA. So this is where the need of investing money through stock market has become very important. So to make this investment, make these benefits available to the larger number of population, SEBI has taken various measures recently, and that some of the measures I will cover in my slides when we proceed to the presentation. Now, what are the unique benefits which these investments brings to us? When we invest through stock market, when we purchase the shares of companies, what are the unique benefits which we are getting? I will just go through some of the benefits which are derived from the investment through shares. Now, the first benefit which we get is that there is no requirement of minimum amount. Why? Because now you can buy even one share of any company due to the dematerialization which was introduced by SEBI in the year 1996. This is the major landmark development and the reform which SEBI has brought in the year 1996. Of course, the dematerialization was done in phased manner, and it was started with very few companies initially in the year 1996, and gradually all the listed companies were covered under dematerialization. And today we have compulsory dematerialization trading happening in all the streams. So this is the first benefit. Second is that high liquidity due to T+2 trading cycle, and exchange guarantees the settlement of each trade. Now, there is a guarantee which exchange is giving for every trade which you are doing on the exchange. What does it mean? The guarantee of your settlement of trade. Thus, there is no default risk now, because if you are buying 100 shares of Reliance, for example, you will definitely get those shares on T+2 day. And this is the guarantee which stock exchange is giving from on its own. So you don't have to worry about this. This is the another major reform which SEBI has brought in since year 2001. Now, next benefit is that highest returns compared to any other investment. Just now, I have explained you how the investment of rupees 100 has become 75,000. Investment of rupees 100 in 78-79 has become 75,000 in 2021. That is because the CAGR is 16% per annum. The Sensex has risen at the rate of 16% per annum. So this is the highest return compared to any investment avenues available in our country. This is the most important benefit, and you must be, as a institute students or members, you must be aware of this. This is the investment which attracts the lowest income tax on profit. You take any returns from any investment saving schemes or bank FDs, there is a tax at the rate of in which slab you are falling. Suppose you are falling in 30% highest slab, then you have to pay 30% tax even on 5% interest which you are getting from bank FDs. But here, the interest, the income tax is lowest one. The total income tax which you are paying on your capital gain is 10% on your profit, and that too after setting aside 1 lakh of profit. So there is a standard deduction of 1 lakh. So suppose you are making 1,50,000 as profit, first 1 lakh will be set aside. So on 50,000 there will be only 10% of income tax. So this is the most important benefit which you are getting from investment through shares. Next one is very simple and user-friendly trading process is there through trading apps and websites. Nowadays, everyone is using apps. All the major stockbrokers have come out with mobile apps, and you can just trade while you are moving. Means just you should have mobile in your hands. You can do trading at any time. So this is the user-friendly benefit which is available for you when you invest in shares. So these are some of the benefits which I am highlighting. And now to start trading in stock market, what are the requirements? There are three fundamental accounts which you require. That is, first one is bank account, second is trading account, and third one is demat account. Bank account, trading account, demat account. The moment you open these three fundamental accounts, you are ready for investing for trading in stock market. Now, in this account opening process, I would like to highlight one development which has happened in last year, April. Due to pandemic, people were not able to move from their home. So in the April 2020, SEBI has come out with one major development, major reform actually. They have introduced eKYC. Now, by introducing this eKYC process, the investor can open now these account trading and demat accounts sitting at home within just 20 to 30 minutes of time. This is just a 30 minutes process by which you can open your trading and demat account, and from the next day you can start the trading. So this is the most the very important measure which SEBI has introduced last year. And under this eKYC process, there is one part where you have to verify in person. Process was there. Earlier, you have to visit physically to the member's office or depository participant's office to verify in person, to do verification in person. But now this verification in person is done through a video, a 10-second video, which you can shoot on your mobile and just forward that video to your trading member or depository participant. So this is the major change which has taken place last year, because of which there is tremendous increase in the demat accounts. You would have seen that there is a multifold increase in the demat account and trading account with the members. So this is the most important measure which SEBI has taken last year. Now, when you decide to invest in securities, you will ask what are the things which we should see to identify a company for investment. There are total more than 5,000 companies listed on the stock exchange. So how we will identify a good company for investment? So in this slide, I will just briefly give you certain parameters on which you can judge the fundamental of the company. As you are aware, there are many, if you want to go into detail of this fundamental analysis, there are many courses available on our institute. We have our BSc Institute Limited, and they are conducting certain programs which are at the advanced stage of, they will take you at the advanced study of this fundamental analysis. So in this slide, I will just briefly cover the overall certain parameters, important parameters, which you should be looking into for a company. So first one is the reputation of promoters and their stake in the company. Now this is very important. The reputation of promoter and their stake. It means how much percentage promoters are holding in a company, how much percentage of shares they are holding. The more the percentage of shares they are holding, it is good company, because the promoters themselves are having faith in their company, and that gives an indication that they are very much confident in their business perspectives. Next one is position of company in its industry. There are three categories of companies, that is small cap, mid cap, and large cap. So you have to see which that depends upon the market capitalization of a company. So you need to see in which category your company is falling. So it does not necessarily that a small cap company is not good for investment. Of course, small cap company is good for investment, but this particular parameter has to be looked into along with so many other parameters which I'm going to share with you now. Now, financials of the company, including EPS and PE, etc. Now, EPS, as you know, it is earning per shares, and PE, price earning ratio. So these are the financial, some of the financial ratios which you should be looking into while deciding about investing into shares of a particular company. Free cash flow from operations. Now, this is very important. This is the money which every company is generating from its actual business operations. This is the money which is coming into its bank account. So this is you have to see how much cash flow a company is generating on a quarter-to-quarter basis, on a year-to-year basis. Past growth track record of sales turnovers and profitability of the company. This is a very important parameter which you must be aware of this. Now, dividend payout. You should see how much dividend a company is paying, and whether it is consistent in paying dividends over the year after year. This is important because a company can pay dividend only when it is making sufficient profits. Debt of the company. Nowadays, this is the very important aspect you should be looking into. How much debt a company is carrying, because the more the debt company is carrying, that means the more the amount of profit it will pay towards the interest to the creditor. So normally the ideal ratio of debt equity is 1:2. So total debt of the company should not exceed half of the equity of the company. Now, how good company is at corporate governance? Now, this is another important aspect. As SEBI has set various guidelines, there are regulatory requirements of applicable to all the listed companies to to comply with various corporate governance norms. So that includes various filings which companies have to do with the stock exchange, and I will be covering that into detail in my next slide when I will reach to the BSE exchange website topic. I will cover that this particular aspect in detail about this filing of these corporate filings by the companies in my next slides. Now, what is the share of these FIIs, DIs, and mutual funds investment in the company? Now, this is very important. Whether the financial institutes are buying the shares of the company, what is their holding in this company? So this gives you an idea. This gives you an indication that institutions, after doing a lot of research, are investing into this company. So this aspect you have to see when you are looking into fundamentals of the company. So these are some of the basic fundamental parameters which you should be looking into while deciding about investing into shares of a particular company. Now, all this analysis, fundamental analysis, which you have to do, you will ask where we will get the information for this analysis. So today there are various sources of information. There are business corporate TV channels are there, business channels are there. The newspaper is of course a traditional way of method of getting this information. And the most important source of this information I'm going to share discuss with you in this slide, that is exchange website. This is the official place where you will get all the information about the companies at one place. Now, this is the focal point for information information dissemination. So at one place you will get variety of information, lots and lots of information about the companies on this exchange websites. Now, exchange website provides varied range of information about companies. The basic information, first information which you will be interested to know about the company is that where the company is located, the official address of the company, then the contact details, who are the directors, who are the auditors, who is the register and transfer agent of the company. As a shareholder, as an investor, you should be aware about these fundamental details of the company, and these are available very much updated on exchange website. Now, apart from this, exchange websites also disseminate various trade information. As you know, the live price and volume across all segments are disseminated on the exchange website when the trading session is going on. Along with that, historical price volume information is also available about the companies on these sites. So you can use this information for doing your own study, own analysis. This is the topic which I was discussing in my previous slide, that about corporate information. Now, every company has to mandatorily, under regulatory requirement, has to submit to the stock exchange on quarterly basis their financial results. Financial results are the most important statements which you need to study before deciding for investment in the shares of a company. Then there is a shareholding pattern. This is also given on a quarterly basis. Then annual reports, yearly basis. Annual reports gives the complete picture of the company, the complete in and out about the company's business transactions is reflected into annual reports. Then corporate actions. What are the corporate actions company has taken? whether the company has declared any bonus or rights share, given shares on rights basis. All this information is available on the exchange website. Apart from this, there are various other miscellaneous informations are also available on the exchange websites. And this is the real-time corporate announcement. Now, this is very important thing which is happening nowadays. Okay, the moment there is any decision taken in the boardroom of the company, or any decision taken related to the business of the company, the first thing they have to do is to inform the stock exchange. The company cannot inform this to any other person or any other entity apart from stock exchange. If they do it, it is a violation and they attract heavy penalty for that. So first thing they have to do is inform the stock exchange. And what does stock exchange do? Stock exchange immediately disseminate that information on the website for the general investors. So this is the real-time corporate announcements happening on the exchange related to all the listed companies on the trading platform of the exchange. Now, all these websites are available again on very easily available on mobile. There are mobile apps from where you can access these websites. Now, when you decide to invest into shares of a company, you should know what are the charges, what are the various charges or taxes which I have to pay while doing trading. When I buy or sell shares, what are the charges which I have to pay? So this is again an important information as an investor, which you should be aware of it. Now, first charge is that you are paying to your stockbroker. That is your brokerage charge. As per the rule, it cannot exceed 2.5% of your trade value. So you should be aware that there is a maximum limit, which limit to the brokerage which your stockbroker can charge to you. That is 2.5% of trade value. Next one is securities transaction tax. This is the central government tax which you are aware, and this tax is payable on every trade. 0.1% STT is payable for both buy and sell delivery based transaction, and 0.025% STT is payable only on sale transaction for intraday trading. So this is a securities transaction tax. Next one is stamp duty. This is a state government tax, which is zero. Recently, last year, this tax stamp duty has been made uniform across all states in the country. Earlier, every state was charging its own rate at a different rate, and that was creating administrative problem, and compliance issues were raised. So to simplify this tax computation and collection, the government has made this uniform across all states, and the rate is 0.015% for buy transaction, and uniform charge levied across the country. Now, exchange transaction charge. This is the money which exchanges are collecting from you. BSE is charging very nominal fee of 0.003% for equity trading value. So this is the nominal charge which BSE is collecting from you for providing its trading services for the investors. Next one is SEBI turnover fees. This is the money which SEBI is collecting from your trade. This charge is levied on both buy and sell transaction at the rate of ₹10 per 1 crore of transaction, the 1 crore value of transaction. So ₹10 per 1 crore of transaction. And of course, there is a GST, which is charged only on the income part of income charges, which are there, which are explained in above. So two incomes which are explained above is the brokerage charge and the exchange transaction charge. These two attracts the GST at the rate of 18%, because these are the income of a particular entity. So GST at 18% charge only on these two parts, that is brokerage charge and exchange transaction charge. So these are the charges which you have to pay when you are trading, buying and selling of securities. Now we will understand what is the trading cycle which is followed in India. The trading and settlement cycle. This is very important. You should know if I am buying shares today, when I will get the delivery of those shares, and if I am selling shares today, when I will get money into my bank accounts. So this is the simple trading and settlement cycle which we are following, T+2 cycle, which you are aware. which is uh, normally known as T+2 cycle. So T is the trading day. T+1, you have to make the pay-in of funds and securities against your buy and sell transaction to the stock exchange. And on T+2 day, payout is declared. So the shares, if you are buying shares on T day, you will get shares. The shares are delivered to your broker's account on T+2 day. And as per the SEBI guidelines, within 24 hours from this T+2, here your broker has to transfer the shares and money into your bank and demat account, depending upon your transaction. So this is the trading cycle, very clear-cut trading and settlement cycle which we are following. And what happens? Definitely, there is a default chances are there. Temporary defaults are there. So default in the sense, suppose you are buying say 100 shares of Reliance on T day, and the person who is selling these shares has defaulted in delivering these shares. Then what happens? So as I explained you earlier, exchanges are giving counterparty guarantee for each of your trade. That means they are assuring that you will get 100 shares of Reliance on T+3 day. How that happens? On T+2 day itself, exchange conduct the auction session. Auction session is the session in which the brokers who have defaulted in delivering the shares, all those shares are purchased by the stock exchange from another brokers who are offering the shares in the auction session. And these shares are given to you on T+3 day. So exchanges buying those shares on your behalf on T+2 day in auction session and delivering the shares to you on T+3 day. By this, they are completing the settlement of the trading which you have done. So this is how this robust system works. This is how you are rest assured that whatever shares you are buying or selling, you will definitely get funds and securities against those transactions. Now, what are the changes which SEBI has done recently regarding margin collection? Now, first of all, we will you are aware of what is the margin. The margin is the money which brokers are asking from the clients before they execute the trades. So whatever, suppose you are buying and you want to buy shares or sell shares, your member will ask you for some margin, and that margin was paid earlier. Upfront margin was paid earlier by stockbrokers themselves. But SEBI has made certain changes in this mechanism in the year 2020, in September 2020, and we will just go through this major change which has happened in the stock market trading. So earlier member could pay VAR. VAR is the value added risk margin and ELM is the extreme loss margin from its own deposits. So whatever these two margins were collected upfront by the stock exchanges from your broker. So broker was free to pay these two margins from his own pocket. But now what SEBI has done, as per SEBI guidelines now, effective September 1st, 2020, member has to upfront collect 20% of these margins from the respective clients before executing the trade, and the member cannot use its own collateral for the above. This is the change which SEBI has brought in since September 2020. Now, even the profit on intraday trading transactions cannot be used now, and separate margin has to be deposited for trading in another security. Suppose today you are buying 100 shares of Reliance in the morning and selling those same shares in the afternoon, and you are making profit out of that transactions. Now, if you want to buy shares of Infosys shares after doing these two transactions, you cannot use the profit which you have earned out of these intraday transactions in Reliance towards buying the shares of Infosys. So this is restricted. So when the trade is reversed, the blocked margin is released and available. So what happens? The moment you reverse the Reliance trade, the money which is blocked towards Reliance trade is reversed to you. It is again credited to you, released to you, and that money you can use for the trade in Infosys. So this is the provision which is there in the circular which is issued by SEBI in September 1, 2020. Now, if early pay-in is done by client within prescribed time only, then margins are not blocked. As you are aware, investors are allowed to do early paying against their shares, against their sale transaction. Early paying in the sense you can transfer the shares to stock exchange clearing corporations on the T day itself and T+1 also. So that is considered as early paying because the actual paying is on T+2 day. So you can make the early paying on T and T+1 day also. And when you make this paying, then the margin is not blocked. Now, next provision of this change is that brokers are now mandatorily required to collect margin deposit from clients before execution of trades, which I explained you earlier, that 20% margin he has to collect from you upfront, means before you at the time when you place the order, he will ask for this money. Now, heavy penalty will be charged to member if during inspection it is found that broker has not collected upfront margin from clients and instead same is utilized from broker's money. So this is monitored at the time of inspection, at the time of regular inspections of brokers. Stock exchanges verify all these things. They check all the ledger accounts and margin statement of accounts of brokers and verify this aspect, whether they are collecting upfront margin from the clients and not using their own money. Now, clients will be asked by member to pay margin before putting the trades. So even for sale transaction, if early pay-in is not made in time. So as I explained you, the clients will be asked to pay money upfront because of this circular. Now, clients can now place the shares in their DP account in favor of their brokers. Now, this is very important. Now you will ask me how to pay this money to brokers. Can I give my shares to the brokers? Yes, of course you can do that. Earlier, even in the previous scenario, clients were doing pledge with the brokers. They were pledging the shares with their stock brokers, and there was incidences. There were cases where members were misutilizing those shares for their own benefit. And to prevent that, to curtail that, SEBI has made certain provisions in this circular. We will just see those very important provisions regarding pledge of shares now. Now, earlier shares were transferred to the account of broker, wherein title of shares was transferred, which was the cause of misappropriation of client shares. So earlier, investors were giving the shares into the account of stockbrokers, and along with POA, power of attorney, which is executed with the stockbroker, brokers were having free hand to utilize those shares. And there were cases where some of the brokers have misutilized the shares and they have sold the shares without the consent and knowledge of the investors and siphon of the money. So to prevent these incidences, what SEBI has done now only lien is marked in favor of broker and shares remain in the client's account. Now what happens? The shares which you want to pledge with the broker remains in your account only, your DP account only. Only a lien is marked on those shares, and that too with your complete knowledge that lien is marked. So broker may in turn replace the shares with the clearing corporation for margin, and they will be used only for that client's trading. So brokers cannot use one client's money, the shares which are pledged by one client for the margin deposit of another client. They cannot do that. So this is the most important provision which SEBI has brought into this circular, and the shares remain safely in the account of the investors. And when the margin is unblocked by the clearing corporation, released by the clearing corporation, same lien is removed. Simultaneously, this lien is removed into on the shares which are lying in your DP account. Now, what are the various measures which SEBI has taken to prevent unauthorized transactions? Now, unauthorized transaction was a major problem recently in some recent years. Unauthorized in the sense, brokers were doing trading into your trading account without your consent, without your knowledge. And finally, you were at loss when there was a loss into transaction. Members were asking you to pay the money. And this is where the whole problem started. Because of this, many investors have lodged complaints against many stockbrokers. And to prevent these unauthorized transactions, SEBI has come out with certain measures. We will just see in this slide what are these measures which SEBI has brought in. Now, SEBI has decided that brokers shall execute trades of clients only after keeping evidence of clients placing such orders. Now, the most important dispute part, which was there when the unauthorized transactions were brought into the notice of investors, is that there was no evidence which uh, which can be asked from the members by the stock exchanges or by the authorities to prove that the client has placed the order or not. So to overcome this issue, SEBI has made it mandatory to maintain the records of every conversation which member is doing with the clients. Now, what are the various methods of this conversation and what are the different types of these records which members have to mandatorily maintain now? First one is physical record written and signed by client. So if you are giving any physical instruction in writing, member have to maintain that record. Then of course, telephone recording he has to maintain. Email from the client, log for internet transaction, record of messages through mobile phones, any other legally verifiable record. So these are that all whatever conversation, whatever way you are communicating with this your stockbroker or the officials of authorized person of the stockbroker. Member, it is the onus is lying upon the member to maintain the record. And broker shall justify with reasons for not maintaining the above records. Then other appropriate evidences like post trade confirmation by client, receipt or payment of funds and securities by client in respect of disputed trade, etc., shall also be considered. So all these records are mandatorily to be maintained for at least 3 years period. So why 3 years? Because within 3 years, you can raise your claim in arbitration with the stock exchange. And I will cover that topic in detail when at the end of this presentation in a separate slide. Now, when you do trading in shares on stock exchange platform, there are certain rights which you are enjoying, which regulatory bodies have given to you. We will see what are these rights which you will enjoy as a investor in stock market. The first one is it is your right to receive intimation of trade by SMS and email from the stock exchange. Nowadays, along with stockbroker, exchanges are also sending SMS and email to the registered email ID and mobile numbers of investors at the end of every trading day. Around 5:36, you will receive SMS or email from the stock exchange itself if you have done any trade during the day. It is your right to receive contract note from broker in the specified format given by the exchange showing all the details of the trade. That details include transaction price, brokerage, GST, STT, etc. As applicable separately. And this contract note should be given to you within 24 hours of your trade. This is the regulatory requirement. Third one is, it is your right to receive copy of KYC. All the documents which you are signing at the time of opening the account, along with all KYC documents, it is your right to ask for the copy of all those documents. Now, and fourth one is to receive statement of account at least once in a quarter from your stockbroker and settlement of the same. So these are major rights which you are enjoying. You are investing into shares of the companies. Next one is expect delivery of shares purchased and value of shares sold within 24 hours from payout by clearing corporation. So this I have explained you in the previous slide that within 24 hours of payout which declared by clearing corporation, you are supposed to receive the shares from your broker. Next one is to know details about securities provided by you towards margins, since they are not permitted to be pledged by your stockbroker for raising funds. So whatever securities you are pledging, that details every investor has the right to get those details from the stockbroker. Right to file complaint against company as shareholder or trading member for any claim arising out of trades on exchanges at nearest regional center. So you have right to complaint against any dispute which is arising between you and a stockbroker, or between you and a company, listed company with the stock exchanges. Right to refuse to give POA. Now, power of attorney is the document which every stockbroker will ask to provide, ask you to execute. But you should know that it is not a mandatory requirement. It is not a mandatory requirement that you should give POA to the stockbroker. It is completely optional and it is at your choice. Now, when you enjoy these rights, there are also certain obligations on your part. Now we'll see what are these obligations. Now it is your obligation to make payments towards margin call made by the broker. Next obligation is to adhere to the timelines for delivery of shares against sale transactions and payment of funds against buy transactions. As you have seen, there is a very clear settlement cycle, clearing and settlement cycle, which exchanges are following, and the stringent timelines are followed. And you have to adhere to these timelines when you trade on the stock exchanges. Now, third obligation is that immediate updation of change of address, email ID, and mobile number with broker and DP. This is very, very important thing. Now, everything comes on your mobile. Whatever, all alerts, all SMS, all important SMS are received on your mobile phone. And if your mobile number is not updated with your stockbroker and DP, then you will be at loss. So it is in your interest to update immediately whenever there is a change of any of these details with your stockbroker and depository participant. Bank details, additionally, you have to update bank account details with your depository participant, because all the dividends nowadays are credited directly by the companies to your bank account. Now, this is the most important topic which we are coming into. Now, when you are doing trading as an investor, doing trading on the stock exchange platform, in order to protect your money, what are the do's and don'ts which you have to follow as an investor? These are the very important do's and don'ts. As a prudent investor, you should follow these do's and don'ts. We will go one by one. What are these do's and don'ts? First, very important thing is deal only with SEBI registered broker or intermediaries, because if you are dealing with any unregistered entity, you cannot come to stock exchange or any regulatory authority for redressal of your dispute or any loss which you incur because of the mismanagement of your funds and securities. Can you just give me a moment? I will just plug on my power. What? Okay. Extremely sorry. My laptop power was going down. Sorry. So deal only with registered SEBI stockbrokers, SEBI registered stockbrokers and intermediaries. Next one is, while applying in IPO, do in-depth study of company, read risk factors in DRHP. Don't get influenced by gray market premium, which is disclosed every day after the IPO is open, and listing gains assurances in media. We want to very specifically mention about this in our do's and don'ts, because nowadays there are a lot of IPOs coming out, and you cannot blindly apply in every IPO. We are not saying you should not apply into in IPO, but while applying, you have to do complete in-depth study about the company, and you go through the DRHP, which is in detail given by the companies and available on the SEBI and exchange websites. And this don't get guided by this gray market premium for taking a decision of applying into any IPO. Don't trust any hot investment tips providing unrealistic returns on investments. So this is very important. Any unrealistic returns which anybody is assuring to give you is not possible in this market. It is only possible only for certain time, but in long run you will be at loss. So just avoid these tips which are coming to you through SMS and email, and you have to be very careful while taking decision on the basis of these tips. We are advising investors not to follow these tips and hot investment tips and messages which are coming to you through SMS and emails. Do not buy shares on tips circulated through SMS and email. Just now I covered this. Get clear about all brokerage commissions, fees, other charges levied by broker. So all these charges which I have explained in the previous slide, you should be very clear about these charges which your broker is charging to you, and you should see the contract note. The contract note covers everything, all these details. Read, understand, and then sign the voluntary clauses in your account opening documents. So whatever clauses which are voluntary of voluntary nature, you should understand, read carefully those voluntary clauses, and then only sign those clauses. Obtain a copy of all documents executed by you from broker free of charge. You have, as I told you, you have the right to obtain the copy of all documents executed by you with the broker, so that if any dispute arises, you should produce those documents before the authorities. Next one is fully understand the system, features, and meaning of each option for online trading. Nowadays, everybody is doing trades through online app. All the members have come out with very fantastic mobile apps are there. And what we suggest is that first understand each and every option which is given in the app, every feature. So because at the click of the button, today the trades are happening. And if you click wrong button, you press the wrong key, there is you are going to make a huge loss, possibly huge loss. People are doing this. I am telling you, at the time of buying the shares, people are selling the shares, and at the time of selling, they are pressing the buy button, and then it's at a fraction of second the trades are happening on the exchange platform. And this is why it is very important that you should know the each and every feature of the app very in detail. You should understand the complete system properly. Make payments by banking channel. As you know, no cash payment is accepted in the stock market trading. You have to make payments through check only in favor of stockbroker. Don't issue checks in the name of any individual apart from the broker. Don't share your internet trading accounts password with anyone, as this is a very common precaution which everyone is aware of this. You should not share the password of internet trading account. Bring dispute to the notice of broker within 7 days, 7 working days. Now this is the regulatory requirement. You have to bring any dispute out of your trade within 7 days to your broker. Next one is problem not solved by broker or DP. Write your complaint to investor grievance sale of relevant stock exchange or depository without delay. If within 7 days, if you are not satisfied from your broker or DP for your grievance, you can approach the stock exchanges immediately after 7 days. Now, if in doubt, revoke any authorization given by you at any time. Suppose you have given POA, power of attorney, to your broker for a specific purpose. If you are not comfortable with that, you can revoke that power of attorney, you can revoke that authorization anytime. You have that right to do. Do your own study about fundamentals of the company whose shares you are buying. As I explained you earlier, you have in the parameters where fundamental analysis was explained to you. You have to study each fundamentals of the company on your own. Don't get carried away with advertisements about the financial performance of companies in print and electronic media. This is very, very important. Most of the companies who are indulging into manipulation of the price, or where the price manipulation is going on, you will see that there is a lot of buzz in the media about that company. For a particular period of time, you will see everywhere people are talking about that company. So you have to be very careful about when there is a lot of buzz in media about a particular company. So you should not be carried away by these advertisements and financial performance of the companies in print. Even the financial performances which are coming out in print and electronic media, you have to study those very carefully. Each and every aspect financial parameter has to be studied in detail. Just in on the face of it, it will look like the company is doing fantastic in its business, but actually there are many points which you need to go into detail and see whether there is actual performance or just a window dressing is there. Don't blindly follow media reports on corporate developments, as some of these could be misleading. Yes, media reports on corporate developments can be misleading. So you have to be very careful while believing in those media reports. Don't blindly imitate investment decisions of others who may have profited from their investment decisions. Again, generally, while deciding to purchase any shares, we we rely upon the reference given by our family or a family member or any family friends. So generally people are doing this. So this is very dangerous. Means if he is wrong, you are also going to be wrong. So you have to do your own study. That is the underlying statement which I am making repeatedly. You have to put your efforts to make your own decision. Avoid accessing your internet trading account through free Wi-Fi offered at airports, malls, cyber cafes, etc. As you are aware, these are mostly unsecured networks and can endanger your system. Now, when we talk about trading in shares on the exchange platform, as a regulatory authority, we have stock exchanges have given a robust redressal mechanism for you. Suppose there is a dispute arising between you and your broker. What are the recourse available to you? I will just explain in this slide. What are the robust time bound recourse available to you to redress your complaint? So first is there is a BSE provides investor grievance redressal mechanism for complaints against companies and brokers. So there is a mechanism whereby a committee formed under the name Investor Grievance Redressal Committee (IGRC) is there, wherein retired judges and prominent members from the business community are there, and who are hearing the cases of dispute between broker and investors. Every exchanges are having this IGRC committee under SEBI guidelines. So currently IGRC and arbitration facility is available in 24 cities across India. Now, if you ask me, suppose a person staying in Patna has any grievance against a member of Mumbai-based member, so do he have to come to Mumbai for filing his claim or any claim of arbitration? So answer is no. He don't have to come to Mumbai. He can file the case in Patna itself. There are 24 cities across the country where this mechanism is available. So investor should not be wasting his time and money in traveling, and he can file at his residence state or city and redress his grievances against the members of Mumbai Stock BSE. Now, BSE provides IGRC arbitration as well as appeal facility, which is quasi-judicial dispute resolution mechanism. Now, IGRC is a conciliatory mechanism and arbitration is a quasi-judicial mechanism. So these these are the two levels of redressals. When the dispute is not resolved at the level of IGRC, then the aggrieved party can file the case in arbitration. So this is the two-level redressal mechanism available on the exchanges. Now, both these mechanisms are fast, time-bound, and fair processes. Why? Because in IGRC, the dispute has to be redressed within 30 days from filing. And in arbitration, the claim has to be decided within 4 months from the date of filing. This is the regulatory timelines given under SEBI circulars. Now, award is binding on parties. Now, if suppose there is an arbitration award against a particular stockbroker, it is binding upon the parties, means it is binding upon the upon stockbrokers to settle that award, to pay against that award, which is given by the arbitration committee. Now, for claim up to 10 lakh rupees, arbitration fee is exempt for investor. This is very important investor-friendly measure, which is introduced by SEBI. A small investor having claim of rupees 10 lakh and below can file arbitration case completely at free of cost. You don't have to pay any arbitration fee. Now, exchange set aside award amount if award is in favor of investor. This is very, very important. Suppose an award is in favor of investor, you don't have to worry about implementation of that award. The money will be paid by stock exchange from the deposits of the member, which is set aside. So every member has to maintain certain deposits with the stock exchange, and your award money is paid from that deposit money, from that deposit which is available on the stock exchange. So you don't have to worry about that. Now, advance payments to investors for pending matters through IPF, and also compensation from IPF in case of broker becoming defaulter. Now, suppose you will ask, suppose my trading member is declared defaulter, so then who will pay me the money? Suppose I have to receive 10 lakh rupees from my member and he has been declared defaulter by the stock exchange. You don't have to worry for that, because there is a specific fund, specified fund called Investor Protection Fund, which is created under SEBI guidelines in the year 1996 with BSE. And that fund is, the objective of that fund is to compensate the clients which are incurring financial loss because of their broker being declared defaulter. So suppose you are making, you have any claim against any member who is declared defaulter, up to 15 lakh rupees exchange will pay from its investor protection fund. So this is the very, very important investor friendly measure, which is introduced by SEBI, of course, implemented through stock exchange mechanism. So these are the most, important investor friendly measures, and which stock exchanges are implementing. And by this, I have completed my presentation. And in case you have any queries related to your trading on stock exchange platform, you can raise those queries in the chat box, and I will be happy to address those queries. Thank you very much.
Thank you very much, sir. Selva, any queries? Selva? Selva?
So, hello.
Any queries?
So queries, you can see it in chat box, sir.
Yes, I can see. There is one query from one attendee, George Ranjan, I think. Your query is, you are saying that if I select a stock at certain price, Selva, there is disturbance from some member. I think some audio is on. Oh. Acha. The query is, if I select a stock at certain price, say 75.10, the price will be freeze at this price, or will there be change depending upon the price at the time of getting the shares? So it's a good question. Suppose you have executed a trade at 75 rupees, there will not be any change at the time of settlement of your trade. Your contract will be issued at the 75 rupees only, and on the T+2 day, you will have to pay 75 rupees only. Suppose on the T+2 day, the price of the shares which you have purchased is, say, 80 rupees. You don't have to pay 80 rupees. You have to pay only 75 rupees. So it does not get changed. The moment you execute the trade and the contract note is issued, the price remains same. Okay. I hope I have cleared your query. Next question
Any
is,
questions more there?
will fixed deposit be accepted as margin? Yes. This is a very, very good question. Margins are accepted in three forms: fixed deposit, bank guarantees, and securities. So you can give fixed deposit towards margin. Yes. Next question is there any minimum margin deposit to be provided by a client to broker as per BSE rule?
Sir, it's speaker has internet issues, sir. Let's wait for some more. This video got frozen.
Over, Selva?
Yes, sir. It seems his video got struck due to internet issues. So maybe we'll just wait for one more minute. I'll just check with them. If not, we'll close it, sir. Session got ended. We just need to take Q&A alone.
ಫೋನ್ ಮಾಡ್ತಾ ಬೆಳಿಗ್ಗೆ ಬರ್ತೀವಿ. ಈಗ ಬಜಾರ್ಗೆ ಬರ್ತೀವಿ, ಅಂತ.
Sir, he will join, sir, for taking up the queries, sir, in 1 minute, and we'll find up session once 2 questions are taken up, sir. Just few more minutes, sir.
Okay, done.
Sir, you can take up the questions, sir. So you unmute yourself, please.
One moment. Sorry, my internet has gone for a moment. Where we will get margin required for derivatives as per SEBI or exchange regulation. See, every day, at the every end of a day, exchange generates the margin statements, and those statements at the client level, means client level margin statements are generated, and those statements are downloaded to the your stockbroker. So you can ask your stockbroker to get your margin obligation for a particular day. On a daily basis, exchanges are generating this and downloading to the members. Next query is, what is margin requirement for intraday trading? Yes, as I explained you in the presentation, you have to pay upfront margin for your intraday trades also. So generally, VAR margin and ELM, that is value added risk and extreme loss margin, these are the two margins which are paid upfront. But so normally it ranges from 20 to 25%. So up to 25% member will ask the margin on the intraday trades. And the moment you enter a reversal of the trade, suppose you are buying shares and selling the shares in the same day, when you execute a sale transaction, the margin is unblocked. It is released to you in your ledger account. So this is, I think I have answered your query. Next question, next query is from Mr. Arunachalam. Sir, is there any minimum margin deposit to be provided by a client to broker as per BSE rules? The same question was asked by previous attendee. There is no minimum margin which client has to pay. It is up to what value of shares you are buying and selling. It is depend upon the value of your transactions. So as per your value of transaction, it varies. But as if you are doing a regular transactions with your member, you can keep some advance money with the stockbroker so that you don't have to always compute and give money to and from the member. So some advance monies can be kept with the broker, which can be utilized towards your margin obligations. And next question is from George Ranjan. Sir, thanks for clearing my first query. The second query, is there any chance of my buy or sale is not executed after placing the order? This is not possible if you are putting a market order. There are, if you see, when you place the orders, go for placing the order, no, there is a market order and there is a price order. So if you are putting a market order, then it will definitely get executed if there are sellers. If you are putting a price order, then it depends upon when the price will reach that when that price is arrived, then only your order will be executed. So there is no chance when there is a market order is placed. Next question is from Raja Shekhar Shetty. It means we have depend on brokers for margin required for derivatives. Yes, for every margin obligation, that stock exchange only generate the margin obligation statement for at the client level, at the gross level, and that too at gross level. And the broker has to inform you about these margin calls which clearing corporations are making on them for your trades. Sir, what is the margin in trading? As I explained, I have already explained this. For trading purpose, again, there is a margin of ELM and VAR. VAR and ELM are the two margins which are collected upfront. So that comes to around 25% of your value of trade. So contract value. So this is, and that margin is released the moment you enter into opposite transaction, reverse transaction. Is there any restrictions on buying or selling lots? Of course, there are no restrictions. There are no restrictions on buying and selling any lots. So,
So we'll close it out, sir.
Okay. Shall we close? Sir, thank you very much, Ravindra sir, for your time. And you have given the practical exposure of practical experience and of the stock exchange transactions and restrictions by the SEBI, and you have cleared all the doubts of the audience. Thank you very much for accepting our invitation and being part of this today's function, sir. Thank you very much.
thank you very much.
I also thank the participation, and I think you have benefited from the presentation of Ravindra Palande. Thank you very much, sir. You have made the subject so clear, and even a non-technical man also could understand your presentation. That is the real purpose of this program itself.
Yeah. The whole purpose is to educate the investors.
Yes.
We are not here to advise, give any investment guidance. but to educate them on the stock market, various aspects of stock market trading. I
So
think
many
there is one,
thinking messages are coming.
there is one
Thank you.
query
Thank you.
from, there is one query from Mr. Raja Shekhar Shetty. He is asking,
Yes.
is there any margin for sale transaction? Yes, of course, there is a margin for sale transaction also. Again, it depends upon the sale value. And as I explained you, the there is a upfront margin of 25% on sale transaction also. So I think I have cleared your query. And
Yes.
if all the queries are over,
Yes.
we can conclude the today's
Yes.
session.
Thank you. Thank you.
Thank
very
you,
much.
thank you, the institute for calling me today.
Yes, sir.
And it's my privilege
Thank
to
you
be
very
with all of you. Thank you. Thank
Kind
you
of
very
you, sir, because being teacher, taking out time is not easy for you. But
No,
still
no,
you
no.
are. Thank you. Thank you very much, sir.
Thank
I
you
thank the
very much.
chairman also for selecting this topic
Yeah,
and the
yeah.
back office of our SIRC and all the attendees. Thank you. Good night.
Thank you.
Thank you.